I mean, when I hear that, particularly in an asset class, and if I put my insolvency hat on and I sell assets, and it could be a IT company, it could be a gold mine, it could be a pub, right? Now, that story and that type of explanation makes the asset very attractive. Of course, there's hardly been any insolvency in pubs for a while now, and the ones that have happened, there's been different reasons for that. Generally speaking, it's been a very strong sector, and it's been well performed and been well run.
Cathro and Partners presents The Cut, a podcast about all things insolvency.
Hello everyone, my name's Simon Cathro. I'm from Cathro and Partners. I'm here to do the next episode of The Cut, and today we've got Andrew Jolliffe, commonly known as AJ, from HTL Property, and we're talking about the pub and hospitality sector. I think it's a interesting sector. And how are you, AJ?
Thank you. I'm well. Thanks for inviting me along.
Yeah. And look, I mean, we've obviously seen a really active market in your sector for the last couple of years, and there's been a lot of media around the transactions, and it's been a really hot market. But before we get into that, just give us a bit of a background on where you came from and how you sort of set up HTL Property.
Yeah, thanks. So, look, HTL Property is a boutique brokerage organisation that I guess was born out of big agencies. So all myself and my partners and those that are involved in the company are actually all from big agencies. So we set it up. We saw what we thought was an opportunity or a gap in the market for something of a boutique size, but not boutique in any other reference other than by virtue of being concentrated on transactions. So respectfully, those bigger agencies have lots of tentacles, and we just thought that the market would welcome someone who was or an entity that was particularly focused on transactions. And so that's how it came about. We've been going now for 5 years this year. We've that's gone very quickly.
Big team now, isn't it?
Yeah. We've got we're sort of spread across nationally, but there's in excess of 20 people in the organisation now, which is for a group that's focusing on one particular asset class, being hospitality, being property backed hospitality businesses. That's one of the larger teams. So look, it's been a great journey. It's been exciting. It's been iterative entirely, but it's been hugely rewarding too.
Yeah. And I mean, it's been a very hot market. I mean, if you look at 5 years ago, there was probably two or three of you, and now you're a much bigger team. And primarily, most of your transactions started in New South Wales, and then now it's just grown into more of a national thing. And has a market. There's not a huge amount of consolidation in the pub sector. If we start with that, I mean, there's a number of big owners, but when you look at it compared to other industries where you've got Woolworths and Coles, let's say, for the supermarket chains where there's huge consolidation, there's still a long way to go when it comes to the pub sector around that.
Absolutely, absolutely. Look, it remains hugely fragmented on a national basis, even on a state basis. It does.
Yeah.
Woolworths and in another vehicle now, but Coles, through their own vehicle, still have an interest, and the industry welcomes them to have that interest, and they're significant players along with some other private families and a few other organisations. But it still remains, as you say, fragmented. I think the biggest players, so let's say the top 5 players, account for less than 10% of the national marketplace, and I don't know any other industry, let alone property asset class, where the top players account for such a small percentage of the total total business.
Insolvency would be more consolidated than the pub sector. I mean, you look at the top firms in our industry, and it would certainly make up more than 10%.
That's right.
And that's interesting because when you think about the activity for the last 2 years, there's been a lot of media around it, a lot of great transactions, and a lot of changes to the industry in terms of what's been offered. So you've seen the quality in the product really, really improve, and some of these bigger players have really done a great job in sort of taking it to the next level.
So, I mean, that's for sure. I think, it's been exciting for us to participate in the role that we have, but, just to be attached to an industry that has been able to change and been able to improve, as you said, and that's certainly, that's my proposition, is that, this industry, has become better managed, has become better capitalised. Its leadership at an industry and a government level is probably at the vanguard of where it's ever been, which means that hoteliers and investors into that space can produce a better product and are being rewarded for doing that by the increased patronage. But pubs have always, if we look at that asset, in particular, so we look after pubs, or traditional hotels as we call them, accommodation hotels, resorts. We've got a debt funding business as well, as a lot of commercial property agencies do. But if you just stop there for a second on pubs, I mean, there's a fascination with pubs that exists in this country and has done for decades, and for good reason. They've played an important role in the community, wherever that community is, whether it's a CBD workforce community, or whether it's a suburban community in a major capital city, or whether it's a regional town. Those entities, those pubs, are the very epicenter of around which the rest of the community orbits, where they meet to celebrate, where they meet to commiserate, where they meet, and so they play an important role. And so it's on that basis, it's, as I say, it's a rewarding asset class to be involved in.
Yeah, I hadn't really thought about that, but if you go back 15 years ago and you look at the typical pub owner, and there's some today that were there, and they're with a large number of pubs, even bigger now, but do you think what was being offered back, say, 2005, 2006 is much different to what we're offering in 2023 in terms of...
Look, the facilities are greatly improved. That sort of magnetism, though, towards towards the owner of the hotel, or the publican, or the pub family, that still exists. That still exists today, and I think the successful operators in our space are those that have that connectivity with whoever the audience that the pub is speaking to. And we can all think of families or suburbs where you'll refer to the local pub by virtue of the pub family's name. Whoever the family is, it's that family hotel, right. And people enjoy that, enjoy that association with them. And then I think that the families then also that have the stewardship for that period of time, there's an incumbency upon them to behave as a business and as a corporate citizen and as a community member in a certain way. There's an expectation that they, employ locally, that they maybe buy local produce, that they support local, sporting organisations, which pubs and clubs, for that nature, but have always done very well. So, there's a great reach into the community. There's a role they play, and I think that's why there's such an attraction to them. And there's such a fascination in the media. And so, we enjoy it, and long may it continue. But we enjoy, selling a pub asset at a fraction of the price of some other more significant commercial buildings, but enjoying far greater media attention because of what it is.
Yeah, and. Yeah, I mean, let's look at that last 2 or 3 years, and okay, we had low interest rates, and you could sit there and say that drove pricing, but it felt to me like the pubs, in terms of almost a corporate asset or an investment, sort of exploded in the last 3 to 5 years, and maybe it's the media that's created that perception, and it's been a gradual value or appreciation in the last 15, 20 years. But we saw it became very newsworthy, I suppose, a bit like sort of insolvency at the moment, where we seem to be newsworthy in our cycle, but during that period there was a lot of there was a real focus on that as an asset class and value appreciation. Is that sort of how you saw it, or was it more just the news got hold of it and suddenly everyone else woke up to it and that's how it looked?
Well, look, I think the thing about I agree with you, but I think the thing about pubs, traditional hotels, is that they're indefatigable. They survive all sorts of challenges. Whether it be recessions or whether it be the introduction of drink driving laws, which was a huge challenge for this industry, or whether it be 18 to 22% interest rates at a period in time, whether it be the GFC, whether it be COVID, whether it be, dare I say it, knee-jerk reactions at a legislative level to certain issues. Pubs have a way of dealing with those things, and I think fundamentally the reason they do is because they're simple businesses, but they're very robust. They're positioned geographically, often on a high street, whether it be in George Street, Sydney, or George Street in Corindi. They're often on the high street. They're more often than not on a corner. They're a significant commercial land holding, and so that lends them to be able to be other things if they need to be, and to draw upon other revenue streams, whether that's accommodation at a point in time, whether that's food, the introduction of food, which has happened over the last 10 or 15 years, whether that's an alternative use or an ancillary use to what they are. Can you excise a piece of the land that was once used for vast car parks where less people are now driving to pubs? So can we maximise that space by putting in some other accommodation, and it may not be pub style accommodation. It may be units, residential.
So it's a multi-use now.
Multi-use.
It's very multi-use, and that seems to be trending in a more
absolutely. Obviously, the introduction of gaming in 1997 in New South Wales was hugely beneficial to that business model. But they've always had a way of managing through, even during COVID, where the only thing that was able to be sold was retail liquor and takeaway food, and publicans moved quickly. They can respond very quickly. They're hands-on people. The successful publicans that you and I and the audience will know are hands-on. They're often at their pub.
Yeah.
They address these challenges, and they're able to morph into providing a service, whatever that is.
And very, very approachable people. Like you come back to your earlier comment about the community calls them by their name, and that's because they'll walk into the pub and the person's actually there.
Yeah, that's right.
And even for those that own multiple of those, as you and I know personally, they make personal appearances and regularly, and so that maintains that sort of aura, that sort of family feeling.
That's right.
Now, it's a question I've always wanted to ask, but there's always a commercial hotel. There's always a royal hotel. Is that true, or is that just something that?
No, I think it's a reality. I think you're right. I thought you were going to ask me why, and I was hoping you weren't, because I don't know that I have the answer. But there's a royal or a commercial. There's a top pub, in the country towns, and the top pub.
That one actually.
That's a common one, and the bottom pub or the top pub, and I think it's a potential geographical reference. But there's always a star often. There's the Imperial, so another
Imperial's
common one.
Yeah, that's true. I mean, you're going. I'm pretty sure I was at Coonabarabra the other week, and I'm pretty sure there's a commercial there. It's like you drive in, and there's a Woolworths or Coles, and there's a commercial of the Royal.
And then there's commercial. Yeah. And I think people are patriotic about these things too. So they will have sponsored the local sporting team, and they might have had some success or otherwise. But people love talking about their local pub, and they don't have to be a daily visitor. Some of them are clearly, but they like that association. And when we talk to people about where do you live, we often reference
the pub is.
Pub point, like dropping a pin. Where's the pub? How far away are you from the pub or from this pub or whatever? And people seem to know what's going on in the pub too. They're a great, you talk about, it is often referred to as, passing the pub test, and it's for a good reason. I mean, topics are discussed, political topics, obviously sporting topics. What's going on in a town? You can get the buzz from, you can get the mail, the good oil from what's happening in a pub wherever you are, and people are very confident about providing their view in there as well. So that's exciting too.
I mean, when I hear that, particularly in an asset class, and if I put my insolvency hat on and I sell assets, and it could be a IT company, it could be a gold mine, it could be a pub, right? That story and that type of explanation makes the asset very attractive to, and of course there's hardly been any insolvency in pubs for a while now, and the ones that have happened, there's been different reasons for that. But generally speaking, it's been a very strong sector, and it's been well performed and been well run. I suppose just trying to think about today's pub owner and how they've evolved from 20, 30, 40 years ago. What would you say would be the biggest changes they've made? Is it the way they run the business, the way what they offer, or what they, what the multi-use, like you said? What would you say would have been the key changes there? Because it would seem to me that the sector's done very well overall. Now, there's many reasons, and people have different views as to what's driving it. But I personally think that there's many reasons why the sector has performed very well, not just the one that everyone thinks it is. And what would you say would be the best changes that have happened over the industry in, say, the last 20, 30 years?
I think a couple that spring to mind. Technology and embracing technology, and even though that might sound like a stretch for a pub, because you think, well, hold on, isn't it the same? Isn't it sort of providing good product and a safe and clean environment and entertainment? But it occurs to me that those publicans who've embraced technology, and that technology can come in the form of the viewing experience, in a hotel for sporting events, which are a huge draw card still in pubs.
Yeah.
And I guess an extension of that is the betting on sporting events. But it's not just about placing a bet; it's about the viewing experience. It's about creating that escapism, going into an environment that is not what you've got at home. I mean, a lot of these things, you can still buy retail liquor, you can still watch the footy at home in your lounge room on your own, you can still have a bet on a betting app, you can do all those things. So pubs really have to probably do more. So they've got to create an environment that you can't have at home, which is that mass mentality, that group of people, that excitement in the air. How do you pull people out of home? And they do that very well. So, but technology in terms of managing staff, so the feasibility of the business in terms of time and attendance, product in terms of stock management, in terms of all of those things that publicans had to do basically on the back of a coaster at a point in time. And the good ones still can, by the way, notwithstanding all the technology.
Yeah,
but
that's true.
That's an important part of it. Reaching out to organisations that are consultants, so taking on board advice. That might be advice in terms of structuring their debt, they're structuring their business. So, the publican 20 years ago did everything. He did the ordering. He served there, or he or she served there. The family were all involved. They probably participated in the cleaning. They had to stay abreast of legislative change. They had to deal with the local, licensing police. They had to then go and then become, treasury experts and go and set debt and understand what might be happening in the market. The modern day publican has realised that some of those themes are still exactly the same, but it is it's really incumbent upon them to make sure that they're drawing resources and consultancy resources from other areas to stay abreast of some of those changes.
Okay, so let's change topics for a minute. So other sectors, tell me, what are the other sectors that you've been involved in recently?
Yeah, look, accommodation, so tourism-based assets. So, accommodation, and that can I guess range from holiday stay park, accommodation to five-star hotels. So all the way up, and resort style. Experiential assets we've had quite a bit to do with. So, and obviously during COVID, or the end of COVID, and even slightly, heading into that period of time, that section of that asset class became more and more popular, and certainly beyond COVID is probably the leading sector in terms of growth, where people want to actually experience something. They're happy to spend more on less, less in terms of the physical thing, but they want a greater experience. So we do a lot in the top of Australia, up in the top end, and down around Victoria, South Australia. So.
Yeah. And how are you finding that sector? How do you see that sector performing at the moment?
Look, a huge bounce back. So, down to the depths of 20 and 30% occupancy. Yeah. Obviously, when travel was restricted, and then even shortly after, when people were still a bit, there was an element of trepidation about travel. But now, 80s, 90s. I mean, that's really, really bounced. So, and we've seen lots of transactional volume there. That's probably leading the way in terms of transactional volumes on a national footprint.
Really.
In terms of the businesses we're involved in.
Yeah, because you're not seeing too much insolvency in that space at the moment. I mean, there's been a little bit, but not.
Yeah, no,
I mean,
no,
it's held up better than we expected. I mean, you talk about 20 or 30%. That's the insolvency industry during COVID,
sure.
and people
Yeah,
don't realise that.
yeah.
That's how much of the depths we went to.
Yes, right.
In our industry, simply
Okay.
because the government put the brakes on enforcement and recoveries. But the hotels you would expect, the accommodation style hotels you would have expected really would have struggled, because there's that sort of that underlying fear that people have to overcome before they start.
Yeah, look. What happened, in my view, is that at the end of the GFC, the lesson out of that, I guess, was gearing and portfolio management. And so, coming out of that, in the entire raft of hospitality businesses, property indexed businesses, I think banks and their clients worked out a new homeostasis, and it didn't look like 70 and 80% LVRs. It looked like 50 and 60% LVRs with some amort maybe, for the latter the latter end. So, when I mentioned earlier in our discussion that these things are better managed, part of that reference was in relation to the capital stack as well. So not as much pressure is put on that capital stack by debt. Therefore, when we do have downturns for a period of times, they're able to absorb that a little better. But we're heading into an interesting time, aren't we? We've seen some more government, information come out today about inflation. So maybe these sort of consecutive interest rate rises that we'd seen over the last number of months maybe have starting to have an effect. But there will still need to be a resetting in certain assets for sure. But by and large, I think the industries have been better capitalised.
Well. Yeah, and look, moving into that, I mean, we start to see what we're in the current market. Insolvencies are back up to pre-COVID levels. We're starting to edge up above that now in the historical trends. Insolvency practitioners are really active. The way I always judge how the industry is going is how many turn up to the conferences, and all the conferences are getting sold out. So that means there's a lot more activity happening in our market. So putting that lens on, and it might not necessarily mean that there's going to be more insolvency in the sectors you look after. Yeah. What do you think the next 18 months to 24 months is going to look like in terms of the pubs and the other sectors that you're part of?
Look, I think, we've certainly seen a lessening in terms of transaction volumes compared to this time last year. Yields and therefore asset pricing have not been materially affected by virtue of the lower number of transactions. But, sort of transaction volumes as one receptor for where the market's at would indicate that there's a bid-ask spread between vendor and purchaser that needs some sort of price amelioration, and we're starting to see that. So we've been fortunate to be involved in a couple of sales this week, interstate sales of both hotel and accommodation-based assets, where the buyer universe probably thinks, okay, there's a strategic reason why that asset's important to us. This deep dive discount that people thought might exist hasn't eventuated. Yeah. So let's move now and get ourselves set. But to the extent that there will be some administrations over the period of time that you're talking about, and almost invariably there will be over any 18-month period. I think for us, where we sit in around that table, whenever we are sitting around that table, it always occurs to me that it's about trust and about management, and once that's eroded, then it clearly.
It's interesting. You say the management usually, and let's talk about your experiences when you've sold an asset in insolvency. Yeah. What are the things that you've seen that have been fundamental to the cause of failure there? Like, that's a good asset class, right? And you still, like in any industry, there are failures.
Yeah.
But
look, what I've seen I guess, I was going to say work successfully, but I guess that the antithesis applies. The earlier somebody can seek assistance, third-party assistance, always the better, from what I've seen. So I think people wait until a point that is, beyond coming back from, and then start to make decisions that they probably otherwise not make, and certainly, down the stream regret. But had they involved some experts, some restructuring experts earlier, that's it's an easy thing to say and a difficult thing to do, and I appreciate that. But had they done that, I don't think I've seen an example where, I couldn't say that would have helped. That situation. Almost every time would have helped. And I presume a lender would also have a similar view that an appointment by a practitioner for the purpose of insolvency is kind of the step, an important step, and oftentimes inevitable. But there are other steps before that I think probably aren't as well known, and certainly not as well exercised by numerous asset classes, and I think everybody around that, using the analogy of the table, the dining room table, everybody around there benefits from that earlier intervention. So that's what we often encourage our clients. Should they, we encourage them to have those discussions, because it is told to us, Simon, by people like your business and by banks that, if there's dialogue and if there's transparency, going hand in hand and great regularity, and it's reliable, that's the best tonic for any scenario that arrives that's challenging for people who are running these businesses. It's when those two things don't occur that banks and others find themselves in a position where they're left with very, very little option. So it's about earlier intervention. And
it is, yeah. I mean, one of the things that we push, particularly in our firm, with let's call our referrer base, which is usually the accountants and lawyer network, and to some extent the banks, is you talk about these risk cycles in an industry, and it goes up like this when you're in startup, it matures and then it drops down. And the thing that I often feel like doesn't happen enough is the business is not talking about financial performance and what it might look like over the coming years. They're talking about what's happening this week, what bill I'm paying this week, what the employee situation, but they're not looking with a longer term lens. And the businesses that do that well, that's where if you would ask me, okay, what's the major cause of insolvency? I would say 90% of it's management.
Right.
And it doesn't matter whether it's mining, doesn't matter it's a pub, whether it's a construction company. It comes down to the management, and the management's not providing enough governance, they're not providing enough analysis, they're not looking at the financial performance enough. They're just, I'm an expert in mining, and that's what I'm going to focus on, but they forget about the rest of what makes up a successful mining operation, or the same for a pub. So the early intervention that you talk about is, works in every industry. Like it just requires the combination of the management who probably have the industry expertise, with the combination of advisors, lawyers, restructuring practitioners, debt advisory, your practice, right? Now you've got that. You could probably easily run a pub yourself, for example, but you have the team and you work with the management. And when we've done safe harbour and restructuring engagements, and most of the ones I've done are sort of that small to mid tier. I don't do like the Virgins or the big jobs yet, but maybe one day I will. But I find that the ones that we've been really successful on is when it's been done as a collective in a team, and management are engaged. And usually, one or two of the management team go. They have to change out because they're actually the problem. And the hardest ones are the ones where the main person is the problem. Trying to talk to them when they've got a major stake in the business that actually they need to step back and let others do it can be difficult. Sometimes you just don't get there. So it sounds to me that that's sort of a similar type of thing that you would see in the sectors that you're dealing with. Very
similar.
foreign ownership. So you go to pubs, there's not much of it, is there? There's not much of it in terms of, is that have I got that wrong? I mean,
No, I don't think you've got it wrong. I think you're right. Foreign ownership in pubs is not common. Foreign ownership in accommodation assets, significant accommodation assets, is prevalent.
Quite opposite.
That's right. Because that model is arguably more scalable and replicable in terms of the proverbial Hilton hotel. Somewhere else in a capital city, there are nuances that exist, between that business and this one, and there are also differences. But by and large, it's a not dissimilar game. Traditional hotels here, pubs, are very different to anywhere else in the world. Very, very different, and that is
right.
And that is, New South Wales, for example, is I think the only state in the world that a private individual can own gaming machine entitlements in their own name, in their own right, unfettered by any government agency, as long as you're paying your tax. Nowhere else in the world can you do that. I mean, you think about casino authorities and regulations around the world. So, and even the ownership structures in other states are far more advanced. But they're typically bigger beasts here. I mean, you think about your own experiences overseas in pubs, whether they be in Europe. They're typically smaller. They're not as big an operation as ones we're fortunate enough to have here that hold literally thousands of people and are so multifaceted. So that's preclusive in terms of an overseas investor saying, okay, well, I've got pub exposure in Europe or in the US or in Asia, therefore I can manage a similar beast here.
The thing is, the asset class, the size of the pub hasn't changed for 100 years. Like, some of these pubs have been around as a structure for years and years. So the idea of big size pubs really happened, decades ago.
Oh, definitely.
Yeah, decades.
Look, some have got bigger. Obviously, I can think of a few. And there's a few.
They've added on the neighbour and all that
they've
stuff.
added on, or they're called greenfield sites. Some of the greenfield sites,
true.
The northwest and southwest of Sydney, or western, in Brisbane, for example, northwest corridor in Victoria, and everywhere in WA. Now that I think about it, there's some monstrous, fantastic businesses that literally seat, a couple of thousand diners a day, huge numbers. And then, it's that elongation of trading hours that we get here too. So, you see some really great examples where hoteliers are getting people in for breakfast and mothers groups and running coffees in the morning, and then trading all the way big lunchtime trade, afternoon trade, evening dinners, entertainment, sport, late night, accommodation, retail, liquor, obviously betting and wagering. Community.
It defines the word community, doesn't it? Like in a sense, because it's. You tell me any other industry that does it. Like,
not many. Not many speak to so many.
Like you just rattle off a whole bunch of things that happen. They're all, and people are coming together for different reasons, right? And again, I'd almost say that's where part of it, maybe a portion of the evolution in the pub sector has actually changed a bit too. Cause
the elongation.
You probably wouldn't have had these kind of breakfasts or stuff.
No, you're actually right. You're right. You certainly wouldn't have. You wouldn't be game to go into a pub for a breakfast 20 or 30 years ago. But now they're the sort of places where you could readily find yourself there. You also might not have taken your family. You might not have had the same confidence about taking your family. But the expectations of the community about what those businesses are is so greater, and pub owners and groups have responded to that by saying, okay, well, that's your expectation.
I do think one of the best things that ever happened to them was cigarettes being phased out of indoor. Because I think if you go back, when what you could smoke, it was like a chimney going into it. And I think once it was almost immediate, the impact. I remember where they stopped it, and you just walk in, and it was just a different experience. And so that's when the family could come, because it wasn't as smoky and hazy, I suppose. So that's it's amazing when you look back at those things and you go, geez, it could have been done a lot longer ago. But I think before we sort of wrap up, and that's been really good, AJ. That was fantastic. I think there's a lot of insights there that people will find valuable. Is there any sort of final thing that you'd like to say around the sector in terms of any thoughts whether it's today or going forward or in the past that that might be just worthwhile sort of wrapping up on?
Look. I don't know that I've got anything overly profound for your audience to say, but given we're talking about the topic of with an audience of insolvency practitioners that might be listeners to your podcast series, which I'm sure they are, and people that are in that sphere. I think the thing, the messaging from me is, we saw it in COVID where we saw pubs were one of the first to shut down because they're such huge aggregators of people, and that was obviously counterproductive to what the government was and the health department were trying to achieve. So they were one of the first to go. So they were wound down quickly, and then they were one of the first to come out of COVID and wound up very quickly. So, in terms of those assets, the ability to be able to change the pace and shape of hotels should be subject to good management and good relationship trust between various people in that capital stack and the management. They're robust things, and they have the ability to change and to reinvent themselves. So, when I think about should there be appointments moving forward, and I can't think of too many in the past where there hasn't been a rebirthing of some description in that asset, whether it be new management or new debt providers or whatever it is. I'm an advocate for early intervention, but I'm also heavy promoter of the fact that that's a resilient asset class. I think lenders have shown their their belief in that by continuing to fund all of these acquisitions that have been going on. Very few, if any, have been without the benefit of some leverage, some debt leverage. I'm confident about where the industry's where it's heading. I'm confident about its ability to navigate its way through potentially choppy times, whatever that looks like. And as a company, we're delighted to be involved in it. And however we participate, we're long-term players, so we understand that the market cycles, and plan on being around in the space for a long time.
Yeah. Well, thanks, AJ, and thank you, everyone. That's our episode, and please tune in to this episode and all the previous episodes, and we've got more to come in the coming months. But thank you very much.
Thanks for tuning in to Cathro and Partners The Cut. We hope you've enjoyed today's episode. For more insights, please visit our website, cathropartners.com.au, or find us on LinkedIn.